You are listening to chartingwealth.com for Friday the 19th of February 2016. We always start with IYY, and that is where we start today. It's a total market fund. It reflects what's going on in the whole stock market. And we saw a rotation going up. The market rolled over from going down, headed up starting on the 16th of February, and it has continued over our last two-day candles. We have a trend line connecting those two candles. We always like to connect three, and what we see is upward movement. Now, over the course of the day, the market was actually down on Thursday, 0.37%. But when we drop back and look at our two-day chart, from our two-day chart to our 4-hour chart, what do we see? Well, we see where the market did not rise any higher than it did on the 17th, and it slid sideways and down just a little bit, still well above the two-day trend line, and there's no rotation over yet in the short chart. It was down a little bit for the day, but down a little bit for one day does not mean a downward moving market yet. We have no indicator of that. Our derivative oscillator fell off just a little bit, and we see the MACD moving, the moving average convergence divergence moving a little closer to the signal line, but no crossing yet. So we'll continue to watch. If we do see a rollback, of course, in the short chart, and then it crosses back over, moving up, paralleling the upward move in the big chart, then that would be a good time to look at getting into the market and following this trend. But we don't have that happening yet, so we'll just continue to watch. Now, let's go from the total market over to the S&P 500. It looks somewhat similar to what's happening in the big market. The S&P 500 is, of course, 500 big companies, so it's a good bit of the volume of the market. Many times this chart looks similar or the same. It crossed over again going up on the big chart back on the 16th. The derivative oscillator crossed over several candles before. And again, we have two-day green open boxes going up, showing strong upward movement. No down tails to speak of on those candles, just strong upward movement. If we drop back to our 4-hour chart, what do we see? Well, we see the topping out, not rising above, of course, where it did at the close of the day on Wednesday, and that's the 17th. And what we see happening is, according to the charts, down 0.41% for the day, so a little bit further down than the total market, still well above the two-day trend line. Derivative oscillators lost a little bit of steam. MACD's pretty much where it was distance-wise over the course of the day, pretty much where it was over the course of the prior day. So we don't have a convergence, a crossing over anywhere in immediate sight. Now, let's then range back out to our two-day candle and move over to the Qs. What's the Qs? Well, that is the NASDAQ 100, the tech stocks. It was down considerably more than the total market and the S&P 500 for the day. And again, we're looking, those of you who are watching the video, those listening on audio, I'll tell you what we see. We see two-day candles moving up. We actually have a third candle that we could probably connect starting all the way back on. We just did that. So we've got really 3 candles connected now. A nice, good, solid trend. We've got on the 12th is when we started seeing the NASDAQ 100, the tech stocks, moving up. And we had the crossover occur back around the 18th. So just on Thursday did the big crossover occur on the MACD, about the same time that we saw the derivative oscillator rotate over. So we're in a confirmed up move now on the Qs, or the NASDAQ 100. And if we drop back to our half-day chart, 4-hour chart, we can see that that movement, of course, crossed over going up on the 12th, continued to move up over the last several days, and over the course of the morning of Thursday, the 18th, the market moved up, and then in the afternoon, there was some down movement, ended the day with a doji, which means a good bit of indecision. Now that could just be digesting of the upward moves. But again, it was down 1.14% for the day in total. Still a good bit of separation between the MACD and the signal line. The derivative oscillator is losing just a little bit of its speed. So again, just because we had a not so good an afternoon in the Qs doesn't mean, of course, that there's any big change in momentum. We'll continue to watch, still well above the 2-day trend line that's connecting 3 candles, a nice strong trend line. So we'll continue to watch. What would we like to see? We'd like to see a pullback, a crossover going down like we saw back around the 4th of February, roll down and then switch over and roll back up for us. When that happens, and again our 2-day chart continues in its up move, we would jump in and attempt to ride on continuing up movement in the trend on the big chart. That's the way we do it. Now lastly, let's go take a look at gold. Gold was up substantially, 2.43%. That was a nice move up in gold. Again, our 2-day trend line continues to hold, actually connected another candle. So we've got a nice 2-day trend line in gold that continues to ride. And of course, if we look at our 4-hour chart, what do we see happening? Well, it's still in a confirmed down move. It's not crossed over going up yet. So if you are doing the standard, that is you're watching and waiting until the trend reverses itself and crosses over going back up on the short chart to meet the large chart, that has not occurred yet, even though there was good up movement yesterday. But again, up movement primarily in the afternoon does not signal a total change in trend. That's why we have the MACD that we look to. Derivative oscillator is still way in the negative on gold. That is where we are as we come into Friday the 19th of February. Don't forget, over the course of the weekend, we will prepare our Monday broadcast plus our weekly review and forecast, where we will talk about what moved the market news-wise over the week. It's the one time we do that. We'll be looking at the weekly charts as well as the daily chart day by day over the course of the week on the 3 indexes that we cover. That is the total market, the S&P 500 and the NASDAQ 100, as well as gold. So we thank you so much for joining us. If you don't have our How to Read a Stock Chart video, you need that, plus our charting layout that we use at freestockcharts.com. Be happy to share both of those with you, plus our daily review and our weekly review and forecast. All you got to do is go to chartingwealth.com, sign up, and we will send it to you. How do you sign up? You just give us your name, first name, and your email address, and we'll be happy to provide you with all of this information. Thanks so much for listening. We love to hear from you. Follow us on Facebook, Twitter, YouTube, Instagram. You name it, we are there here at chartingwealth.com.